What's up, everyone? It's Karthik with MoneyVest. So talk about a boring day in the markets. Literally nothing, right? I mean, this is about as flat as the markets can get. We had the S&P 500 quite literally flat. And in today's market open poll, I only asked you guys if you believed the markets were going to be green or red. I should have put an option for flat markets because this is about as close to being 0% on the day as we get. The markets were only up 0.23 points, and essentially the S&P 500 no change, 0.0%, and the NASDAQ was slightly up over 21 basis points, and the Dow Jones slightly down about 36 basis points, and that NASDAQ's gain also came only from one stock, which was NVDA. Got a little bit of an upgrade from Bank of America as their top rebound pick. And but other than that, it is really the calm before the storm because we've got massive data coming out on August 14th. So in 2 days, Wednesday is the big day. Not only do we have CPI numbers, inflation numbers, of course, are going to be front and center, for which I will be live, but we also have the 13F filings coming out. So we've got the deadline for the second quarter 2024 for institutional investors managing over $100 million worth of assets need to report by that deadline. So we're going to be learning about every single hedge fund out there, whether it's Bill Ackman or Michael Burry or all these different Renaissance technologies. Every single hedge fund manager, institutional investor is going to be reporting their holdings as of August 14th. That's the deadline for the previous quarter, and we're going to learn more what they bought, what they sold, all that good stuff, which is of course going to be a bit of a market moving event. So when it comes to advancers versus decliners, we actually did have more stocks declining on the day, but some of the heavyweights were pushing higher. As a result, the markets were basically flat despite having more stocks selling off on the day. So this right here, NVIDIA pushing up, Apple was up 32 basis points, Oracle pushing up 17 basis points, Walmart and Costco also pushing higher, UNH was higher, SMCI rallying over 6%, Starbucks was up over 2%, but overall it was pretty much red across the board for this heat map. Very small pockets within the market, especially NVIDIA pushing higher after Bank of America, essentially labeling NVIDIA as their top quote-unquote rebound stock picks, and is what they outlined why the NVIDIA, of course, stock has the most potential, because they also do have earnings coming out. So if you come over to our earnings calendar, if you go over to the next week, you'll notice, and of course the week next to that, we've got NVIDIA reporting on August 28th. So at the end of this month, NVIDIA is scheduled to report, which is going to be the biggest earnings for the earnings season, $29 billion of revenue with 65 cents in earnings per share. This is really going to be the make it or break it moment for semiconductors and quite literally for the markets as well, because it's going to be driving a lot of sentiment for the markets. This right here is ETFs. So a little bit of crypto outflow over to, once again, some more fixed income action here. TLT, TMF pushing higher, BIL pushing higher, IEF pushing up. So we did have a little bit of a movement in the bond market and also in commodities. So gold, silver, USO, BOIL, UCO, GDX all pushing higher here for commodities. So we did have a little bit of movement in those particular markets where US ETFs and indexes and of course mid cap, small caps pushing down. Energy sector and technology slightly higher with XLK. We got SOXL, SO, VGT here pushing higher on the back of NVIDIA only, because NVIDIA was the only one that was pushing higher as much as it was. So this right here is essentially a chart with a labeling of every 2% spike in the market or higher. So this right here are instances when we have seen the markets go up, go down by over 2% per day. So these are 2% or more drawdowns for the markets. You'll notice a couple of times we've actually hit limit down, meaning that we have actually gone into what is it called? We've been down over 7%, 8%, as much as 13%. So we've hit halts, trading halts for the market, but we've seen many 2 to 3% sell-offs in the market. So max intraday range on a 10-day average basis, and the markets have performed really well after. So 1 year returns after a 2%, 3% drawdown for the markets have almost always been very strong, which you can also actually see from the volatility analysis, which we are going to go over now. We're going to come back to that. But this right here was from Ryan Detrick, mentioning that VIX above 50, yes, that tends to be quite rare and it happens in clusters. But did you know that the S&P 500 was higher a year later, 91 out of 92 times? So every time you see the volatility spike, and on top of that, when you see the markets come down 2 to 3% per day, that usually is a very good sign for the markets to actually rally higher 1 year later. So every time the volatility has spiked here, markets have dropped quite significantly, and 1 year later, the markets are higher, 91 out of 92 years. So those are very, very high success rate with a 12-month return pretty much at a 99% probability, with a average return of 33% and a median return of 29.4%. So very, very strong potential momentum here from the markets. And this right here is where we are with volatility getting crushed down to 20.5. It's kind of hard to believe that, 1 week ago, we were at over 65 volatility at 180% increase, and we're now back to 20s, low 20s, pretty much coming down to 63 percentile, back in the normal zone for volatility once again. So yes, last week on Monday, there were pretty significant buying opportunities. In fact, I actually closed out my trade on FNGU. So if I bring over our Discord and the trade alert that I sent out today, you'll notice I've actually sold out my position in FNGU. So this right here was the trade that I mentioned to everyone. So closing it out for just under $1,200 profit. This is a trade that I took last week, so not bad for 1 week. And, I was expecting volatility to be a little bit higher after getting up to 65 and not coming down so quickly. So I was gonna, my plan was to actually all cost average a little bit more heavier than 17,000. My plan was to get up to 30, 35, close to $40,000 trade. But again, volatility got crushed back down fairly quickly. We had FNGU in a rally over 20 to 30% from those lows. So I was able to lock in that profit here for just 1 week. And I also did close out my option on Tesla. And I'm actually planning on selling more covered calls as the market continues to move higher, and going to be retrading either FNGU, SOXL, or maybe TQQQ, or some of the other leveraged ETFs for some swing trades. So if you want access to all these trade alerts and, get an idea of what exactly it is that I'm trading, I'm buying, I'm selling, link's going to be down below with that 16% annual discount that you're available to take advantage of before the end of this month. And of course, you can join, access the MoneyVest platform, take a look at our market snapshot. So this is where we are, what stocks and ETFs and indexes are currently in a pullback, dip, correction, as well as do your full fundamental analysis on individual companies. And of course, access all the members-only videos and our stocks and ETFs buy list with my prices, light buys, heavy buys, no-brainer buys, as well as my fair values. So link's going to be down below. We'd love to have you on board. And that's the plan, is when the volatility spikes, I'm going to be ready to strike with some leveraged ETFs and some trades as well. Speaking of volatility, so the contango percentage is now down to negative 3%. We are still seeing the M1 priced higher than M2, so that is still in backwardation a little bit. And we're going to be looking at this price to get volatility for the August month to be priced lower as the September contract, so that we can get back into contango. The back half of the curve is in contango with some backwardation here in M1, M2, and then M3 and M4, as much as M5 as well. Now, CIO says that market sell-off won't last for one key reason, that they believe there is not going to be a tech bubble. And there's been a lot of questions around a tech bubble in the market. And this is from Manish Singh, Chief Investment Officer at Crossbridge Capital. And he says that I don't see any reason to be concerned that you're going to enter a bearish pattern where the market is overbought and therefore people are going to sell. I just don't see that pattern. And, when it comes to bubble territories and technology bubble, I've mentioned this time and time again. I've kind of disregarded this entire philosophy that we're in a tech bubble. And the reason for that is because this is nothing compared to 1999, 1998. Yes, you can make a case that valuations are expensive, but at the same time, valuations are not in a bubble territory. Bubble is something that there's nothing of value there. I mean, bubble is literally, if you've seen a bubble, it is transparent, right? If you poke a bubble, there's nothing there. There's literally air, right? There's nothing. So I don't believe that this is a tech bubble, because yes, you may argue that valuations are expensive and they're high, but they are for companies that are incredibly solid with great fundamentals, great financials, excellent revenues and profitability and margins and cash. So there is a lot of value there. So even if you do see some valuation compression, meaning multiples are coming down, we're seeing a bit of a reset in the overall market pricing, then eventually buyers are going to step in. I mean, for example, last week we saw NVDA down almost 30% from its all-time highs. In fact, you can see that on our market snapshot. NVIDIA down over 22%. Tesla still down over 52%. Broadcom's down almost 20%. Google is down over 15%. Microsoft's down over 13%. So a lot of these companies are coming down, right, because of their overvaluation, but none of them are in a bubble territory because they're all very well-established companies with strong, revenues and cash flow and balance sheets, and they've got a lot of demand for the products and services that they're selling. So this doesn't scream bubble territories. It only screams overvaluation. That's it. So if anybody says that this is a market bubble or technology bubble, then they're really just comparing apples and oranges because the markets were completely different back in 1999 versus what we have now. So in less than 4 hours, in fact, we have a very, very big event which could potentially break the internet. We've got Elon Musk interviewing Donald Trump on X at, I believe, 8 p.m. Eastern. So that I think is going to be super interesting. Again, this is not to get too political, but I think it's still important to listen to some of the most successful people in the world. This is, again, not from a political standpoint, not from a political angle, but really Elon Musk, as we already know, the richest person in the world, the most valuable visionary that we have in the world. Of course, so many different companies that he runs. Donald Trump, as we know, the candidate for the upcoming U.S. presidential elections. I think this talk overall, this conversation is going to be quite interesting. Again, not getting too political here. Even if it was anybody, if Elon Musk was talking, if Donald Trump was talking, if there was any other person as successful as them, I would still be listening to that conversation because there's definitely a lot that we can extract in terms of value, because there's going to be a lot of conversations around electric vehicles, the Federal Reserve, the policy, interest rates, a lot of different things. Now, the Money Vest Index is sitting at 3.36. As you'll notice that we have moved back higher from lows of about 2.85. That was the lowest reading that we got on Monday last week when volatility was an extreme. We had, the overall market breadth completely down, oversold conditions. So we came down to 2.85. Then we quickly reverted back over to 3. And right now we're still in the yellow zone at 3.36. We're still pretty much neutral at the moment. These are still sort of nibble territories for the market. So I'm not really deploying too much cash. In fact, after exiting my FNGU with a nice little profit, I've got some more cash freed up, and I'm getting ready for another trade in the markets, which again, I'm going to be very precise. I'll be very calculated in that trade to once again take advantage of that market volatility, and of course, more leveraged ETFs as well. So link's going to be down below if you want to join us for that. Now, coming over to August 14th, very, very, very important day. Like, I just cannot emphasize this enough, but August 14, 2024, we have the CPI numbers coming out. These are the expectations or the consensus for the upcoming CPI numbers. I did a video breaking down the entire spreadsheet for inflation. So make sure that you do check that out because I think that's going to be very helpful. So that's the CPI numbers, 0.2% month over month for core and headline, and 3% for headline year over year. And core year over year sitting at 3.2%. That is the consensus. And also we've got the 13F filings for the second quarter 2024. You'll notice this quarter ending in June. Deadline is also Wednesday, August 14. So there's going to be double volatility here for the markets from both CPI perspective and also from institutional investors, 13F filing deadlines perspective as well. Now, a few things that I want to address in this video from a recession standpoint that you may have seen on X or maybe other platforms out there. But this right here is the PMI manufacturing index alongside the United States GDP annual growth, or in other words, recession. So what you'll notice is that every time we see the blue line, which is the Purchaser Managers Index, manufacturing PMI index, which is also a very important indicator for overall manufacturing in the United States because that's the Purchaser Managers Index. Every time it's dipped below 50, which is this line, I believe. So if you come back over to the right, because we've got the PMI on the right axis, you'll notice that this is the 50 number. So this is the 50 line. So if I extend it out a little bit further, what you'll notice is that every time we have dipped below that 50 mark, the United States GDP has also dipped below the 0% mark. So this is the 0% for GDP. So I'm going to go across here. So that right there is the 0% for, you know what, I'm going to switch the line color for that one to green. So that's a little bit better. Okay, so what we have here, the red line is the 50% line for PMI, and the green line is the 0% line for GDP. And every time we have seen the PMI fall below the 50%, the GDP is also followed and fallen below 0%. So they have almost identically fallen in tandem with each other. A couple times maybe PMI has fallen further than the GDP. I mean, it has contracted. As you can see, they have both contracted from the top. They have come down. And this right here, once again, perfect example. Go across a little bit, perfect example. perfect example. And these are all recessions, by the way. This is all recessionary times, and we're going back as far as 1948, so almost 85, 90 years. This right here, perfect example, almost in tandem with each other. This right here, perfect example. Again, a couple of times you can see that we're just trading sideways here. And this right here, almost perfect, picture perfect. What time is that? That is 2008. As you can see, that was the great financial crisis, both PMI and, of course, GDP contraction significantly. This right here, I'm assuming is COVID. If you come down, yep, so this is 2019 right over there. You can see the GDP contracting so much and the PMI index also falling below the 50% line. And what we have here is, as you can see, we're already starting to come down for the PMI, right? So we're starting to contract a little bit. As you can see that we were higher. And of course, we've started to see that contraction already. And if that continues, it wouldn't be surprising to me if the GDP also does fall further, because that has happened over and over again. As you can see that I've pointed out on this chart. I've zoomed in a little bit now, and you can see that a little bit further to what the situation is. So this right here is the GDP number, and this right here is the PMI. So PMI is actually going to be in blue now. So we're going to put that in blue, and the GDP is going to be in green again. And then now we're going to switch over to red. So PMI already below 50. We dipped below 50 in 2022, kind of aligned with the inversion of the yield curve. So this right here was the breakdown below 50 for the PMI index. You can see that we're flirting around 48, and the GDP is still yet to dip below 0%. So if that were to happen, of course, we are going to be in a bit of a recession or contraction for the overall economy. There's a lot of signals that are suggesting for more potential downside from a GDP perspective, that there's going to be a potential recession. There's a lot of people, expecting 4 to 5 months of 4 to 5 months of head time for when the recession is going to be here in 2025 at least. And based off my historical analysis, every time the Federal Reserve's actually started cutting interest rates, we've seen a recession within 3 to 4 months, right? 5 months on average actually is what we have seen from my own analysis. And this right here is the unemployment rate with the PMI number. And once again, what kind of correlations you can draw from this, and that is every time we have seen the PMI number fall, unemployment has increased, right? So they have always worked in opposite direction. PMI falling, unemployment increasing. PMI falling, unemployment increasing, right? So PMI falling, unemployment increasing. Over here, PMI falling, unemployment increasing, so on and so forth. You get the idea. So this right here, once again, moving in the same direction, the opposite direction. Either over here, PMI falling, unemployment increasing significantly, significant fall here, increase, significant increase over here, and of course coming down for the PMI. And this right here was the PMI over here, and the unemployment rate spiking during the pandemic over at that time. And what do we have here now? Well, PMI numbers are coming down, and they are already starting to show some more signs of weakness, and unemployment starting to kind of creep up a little bit. Not saying that it's going to spike once again, but historically, that's what we have witnessed. And this is again the more recent trend of both PMI and unemployment. As you know, we saw this decline here, and then a huge spike over here, and now we're starting to see that contraction once again. So there is possibility for us, once again, to see that unemployment number go higher. These are just some of the many signals that I think are super important for every investor to understand. And this is what's creating a lot of fear around those recessionary environments in the market. But at the same time, I really want you to keep a long-term focus, because despite what the short term may suggest for the market, I think it's really important for us to keep a long-term view. And that's why I'm here to tell you that it's important to, trust the process, stay patient, allow for the prices to come to you, deploy cash when you feel like the opportunities are there. And again, it's really important to be patient and trusting the process. So looking at the win streak, so we are now 3 days into this win streak. If you consider today's day as green, because the markets were technically up 23 points, 0.23 points, actually less than 1 point. So we were still green, even though we were just like barely. But we are in a 3-day win streak now, and that's only happened 14% of the times in the last 51 years. So the higher we go, the lower the probability for us to see even more green from the market. And this is where we are within a pullback, so 5 to 10%. Again, we've spent 56% of our last 51 years within a pullback, within 10% of all-time highs. And finally, if you come take a look at the average and median returns from the S&P 500 since 2000s have started, since the turn of the millennia, I believe it is, right? So no, since the turn of the century, we've seen a 9.48% on average and 13.69% on a median basis, with a max drawdown of 37%. However, like I said, if you've got a long-term time horizon of more than 15 years to as much as 20 and 30 years, the chances of you losing money are practically close to 0% because the markets have been positive given any 20-year to 30-year period in the last 200 years. So that's been the market's return. If you've been investing for 15 years or more, any period of 15 years or more, your returns of positivity are over 98% to as much as pretty much 100% that you come out on top with positive returns. So those are some things related to the big picture that I think everyone needs to remember and understand. But yes, short term, there is possibility for a potential recession over in the US as well. Okay, coming over to the markets, volatility continues to slide lower, although closed green up over 1.77%, so just a little bit under 21. If you come over to the 4-hour chart, you can see that we are starting to create this floor, which was historically a big ceiling for volatility. We weren't able to break out above this level, and now it's starting to act as a bit of a floor. We traded down to 18.6, 18.89 to be precise. So we're just trading under 19, pushed back up to 20.7. And that does create markets in a bit more vulnerable situation because if the volatility spikes again, that's obviously going to create some more potential downside for S&P 500 and the NASDAQ as well. Bitcoin really just consolidating sideways. So this right here is the overall analysis. We're going to go ahead and turn this level into a big resistance for Bitcoin now. So that is a big level to keep in mind. And support levels, of course, going to stay put between $48,000 and $51,000. And again, a big resistance to watch over here, somewhere around $60,000 for BTC. For Ether here, trading at just under 2,700. So we've got a massive support here inside this green rectangle at around $2,200, $2,300. And of course, we got a resistance all the way up to 2,861 to as much as 3,334 for Ether as well. So those right there are going to be some levels to watch, of course, coming down to pretty strong areas of demand for Ethereum as well. Okay, now coming over to the markets, starting with SPY, still within the context of this uptrend. So this is the overall higher highs and higher lows. You can see that we have bounced off of that level very, very nicely. Once over here, a little bit of a shorter trend. Once again, coming down here, bouncing off of that level, bouncing off of that level. So this is sort of support level 1, or this is like the uptrend 1, uptrend 2, and then uptrend 3. So those are the 3 different levels of an uptrend or higher lows, if you may, for S&P 500. And right now we're bouncing off of that level considering how oversold we've also been for S&P. So if you come over to the daily chart, you'll notice oversold on the RSI, MACD, and the L3 banker oscillator. So a little bit of a recovery from that lows of 517, 520. However, if you come over to the 30-minute time frame on SPX, you'll notice that we are still, I would argue, within the context of a bit of a downtrend, although we did see some higher highs and higher lows on a short-term basis. So you'll notice that this right here, going up, coming down, going up again, potentially coming down. So this is this could be argued as a bit of a higher high and higher low pattern. So a small uptrend formation. At the same time, you could also make a case for this being a bit of a bear flag for the markets as well. So this could be seen as a bit of a bear flag here, where the markets are basically making lower highs, making a bear flag and then breaking down even further. So that could be a possibility as well, because bear flags, that's exactly how they operate. If you come over to the weekly chart, and essentially if I go over a little bit, so actually let's just come over to the daily chart here. So there we go. It could be a bit of a, let me just figure out the chart. So there we go. So if you could have like this, a little bit of a downtrend, and then a bit of a bear flag, and then a breakdown even further for S&P 500. It's just a possibility if, of course, we see any type of resistance at around this level at 5,400. So that right there is going to be that next level to watch for S&P 500. Coming over to the NASDAQ, and NASDAQ also within the context of a very nice uptrend. As you can see that this right here is the overall higher highs and higher lows for the NASDAQ. That was the bottom, bouncing off of that level, bouncing off of that support, bouncing off of that support, bouncing off of that support. So every single time consistently getting bought up here at those levels, higher lows, and inside that uptrending channel. And right now we're coming up to that resistance, of course, and still oversold. As you can see, the RSI, the MACD, and the L3 banker oscillator on that daily time frame. So resistance is going to be all the way up to 17,000. So this right here, very, very important level to watch. If you get rejected, then a support level, of course, going to be down to as low as 16.5 to as much as this higher low for the NASDAQ as well. So want to be very clear that we're not out of the woods yet. We're not in a situation where we can confidently be like we're going back to all-time highs. I mean, this is great. I mean, the markets are just going to keep ripping higher. There's a lot of momentum. I think today's price action definitely does suggest there is a lot of indecision in the market. Pretty significant doji candle. So lots of back and forth between the bulls and the bears. The S&P closing literally flat tells you everything you need to know about the price action, where there's a very muted sort of decisiveness. There's really not a lot of decision making from the markets here because nobody seems to know where we're headed next. So in these situations of indecisiveness or uncertainty, the markets usually, not always, usually tend to actually roll over a little bit further. And that of course can create some more selling pressure, especially when you tag on the earnings and the inflation numbers, as well as the institutional 13F filings, because that can show us some selling pressure that has been mounting up. I mean, Warren Buffett sold Apple, almost 50% of his position has been slashed. And not to mention, if there's more investors like Warren Buffett, Bill Ackman, or Michael Burry, or any of these other big players start releasing their 13F filings, and you see they're actually cutting their positions. Insiders are selling, like Jensen Huang's been selling NVIDIA like crazy. So that can create that negative sentiment as well. Because it's one thing about the actual impact of these sales getting priced in, which has already happened because it was happening in second quarter. And a whole different story when the sentiment starts getting priced in. Because right now, it's kind of like that theory of cat in a box, right? So if you open the box, there's a 50% chance either the cat is dead or not. And I think that kind of applies well here because we don't know what have they been buying or what have they been selling, right, institutional wise. So there's a 50% chance they've been selling a lot. They've been net sellers in second quarter, and 50% chance that they've been net buyers. So right now we don't know. But as soon as we do find out, that's going to get priced in to the market because that's going to play a big role sentimental wise, psychologically, over to the markets. And that's exactly what happened with Warren Buffett and Apple as well, right? I mean, people didn't expect Warren Buffett to sell this much the way he did. But anyway, so coming over to the NASDAQ, 17,000 is going to be that resistance to keep in mind. We're still quite oversold, but not out of the woods yet because of the things that I explained, still within the context of a downtrend of lower highs and lower lows at the moment. Coming over to Apple, and Apple here pushing back up. So resistance is going to be all the way up to $220, so up over 60 basis points. So nice little rally back up. So we've seen 1, 2, 3, 4, 5, 6 consecutive green days in a row for Apple. And resistance is going to stay up at $220 for this company. Amazon, on the other hand, basically flat on the day. So this right here is going to be that support level. We're trading back above that level of close to 166. So that's going to be that support resistance all the way up to 173 for Amazon, and another support sitting roughly at 145 for Amazon as well. Talking about Tesla, and Tesla here just really consolidating sideways. As you can see, the 30-minute time frame, we have just been trading in that range for such a long time. We got a support level at roughly around 192 to as much as 194, with a massive resistance sitting at close to $203. So we've just been consolidating sideways in that range for Tesla for a really, really long time. So that's going to be that level to keep in mind. The moment we see a breakout or a breakdown, I think we can see some accelerated momentum. $208 is going to be that resistance beyond the $203 level. And a breakdown below 193 could potentially send us in the 180s for Tesla. Talking about NVIDIA. NVIDIA here consolidating sideways, moving back about 109, although after hours starting to roll over a little bit. So we'll go ahead and turn this level back into a support since we are trading above that level. I would argue still within the context of a downtrend of lower highs and lower lows. You can see that we are not quite out of this downtrending channel for NVIDIA. So keep a close eye at this support, of course. And the next resistance is going to be all the way up to $118 for NVIDIA. If you get rejected here at this lower high, then there's a possibility for us to retrace back up to 103 or possibly even sub $100 for NVIDIA moving forward. Talking about Meta platforms, and Meta here really just consolidating sideways down about 30 basis points, so not a lot of momentum here for Meta. Resistance all the way up to as much as 541, with the support level sitting roughly at 457 for Meta, down to as low as $421 for Meta. So a lot of consolidation sideways in that range for the company at the moment. Google, Microsoft, I picked up last week. I'm actually planning on buying more. Starting to get a bit of that rejection here at closer to 163, 164, or 167, close to that level inside this red rectangle. Support level is going to stay put right here inside this green rectangle in the 150s for Google as well. Talking about Microsoft, and Microsoft here also selling off quite aggressively, very, very oversold. I think both of them, Google and Microsoft, are quite oversold here. So that's why they make for a pretty good technical trade, and also from a fundamental standpoint, valuations have come down quite a bit for both of these companies. Microsoft's down over 13-14% from its all-time highs, trading at a very good support level inside this green rectangle at the moment, and resistance all the way up to $432, $433 for Microsoft moving forward. Let's take a look at Netflix, and Netflix here pushing higher slightly, or has been since Monday. It is up a little bit, close to over 8%. This right here is where the resistance is inside this red rectangle, sitting roughly at 636 to as much as 652 for Netflix, and support levels sitting roughly just under $600 per share. Talking about PayPal, and PayPal here selling off, down almost 2%. It's the story of PayPal. Been mostly consolidating sideways in that range. Every time it comes up to $65, $66, it kind of struggles to break out of that level. Support level is going to stay put at $57 per share for PayPal, and a lot of consolidation with the massive resistance, double, triple top sitting roughly at $68 for the company. Visa still in the context of a downtrend, so lower highs and lower lows. Support level is going to stay put here inside this green rectangle, sitting roughly at $249 to $252, and a resistance all the way up to as much as $267 to $270 for Visa moving forward. And then last but not least, we got Enphase and Costco. And Enphase here slightly up over 1%. Not a lot of price action. We did have actually quite low. Wow, this is insane. 1.7 million volume versus average 30-day volume of 4 million. I actually want to see what the volumes were for all companies. Let's just finally go over to Costco, and then we can come back and take a look at all the volumes from these companies. Costco continues to move higher, up a little bit over 1%, so nice breakout and continuation from that chart. Support level at $839. 1.73 million volume versus 2 million average. Let's take a look at Apple here. What is going on? This is insane. This is actually such low volume. Like, what? 37 million shares traded versus 56 million? That's only 66, 2/3 of the volume. Where is all the volume? If you come take a look at Tesla, we had a little bit over, wow. Tesla was trading at half the volume. 50%. Amazon, of its 30-day volume, we're talking about 30-day average. Wow, 29, just 30 million volume versus 46 million shares that are usually traded. NVIDIA probably sucked a lot of volume out of these companies. Yep, so NVIDIA was on par with what it's usually seen on a 30-day basis, 321 versus 326. But let's take a look at a few other companies like Meta Platforms. We had volume at 9.7 million. 9.7 million usually trades at 16 million, so that's again just about 60% or 65%, close to that number in terms of volume. QQQs, let's see what they've got. We've got 41 million average, 27 million only. 27 million, that is significantly low. 27 divided by 41, we're looking at just about 65%. And finally, SPY, we got volume of 55 million average, 42 million was on the day, so 42 divided by 55, we're looking at 76%. So today was a really, really low volume day, like incredibly low volume day. There was no action. Absolutely no action, just literally no price action because of the lack of volume here on the day. But that's where we were. Hope you guys enjoyed this video and found it helpful. Make sure that you drop a like and subscribe to the channel. Link's going to be down below. Share this video with your family, friends, investors, traders in your network. I would really appreciate that. And as always, happy investing. I'll see you all in the next video.